All right, welcome to another OkieTrade study session. So, I want to talk about a first bounce day pattern, which is a daily chart pattern. What I'm looking at here is a stock that's not at all-time highs, but it's trading all-time volume, so I'm not worried about bag holders or anybody above it that's going to stuff the move, right? So, now that we know that, like, what is the strategy itself? Well, it's a stock that makes in straight green days without a red day a move of 100% or better. This thing moves. Where's the volume come in? 50 cents basically, and it makes a move up to $4. So obviously, multi-day run because we have 100%, obviously 100%, but then we have to look at, is it a multi-day run? Well, you could say that this is the first green day, second green day, third green day, or you could say this is the first green day, and at very minimum, this is the second. See, it opened right here, 330, and made a move up to 4. So technically, it did make a 70-cent move, which is actually not bad after such a huge gap up. It closed at 150 and opened up at 340. So huge gap up and still made a push. So I considered it a multi-day move. Once we had that established, right, it looked like this. So straight green days of over 100% on all-time high volume, pretty much. Um, then we need 2 red days, and it can't go back underneath this first green day, right? So 1 red day, 2 red days, right? And it's kind of holding 50% of the move from 50 cents to 4, and it's kind of holding around right here, right? Well, it doesn't happen on that third day. Usually that's when I'm looking for it, but it didn't happen. Okay, well, what am I looking for on this day? Well, I'm looking for it to gap up and then create a high day versus low day setup, and y'all should know what I'm talking about there on the intraday. And this day we have a huge first bounce day. Awesome move, right? Well, unfortunately, I actually lost on it, so messed it up, but this is good study material for all of us here. And you know, when I break it down how I did lose on it, you'll see that anybody could have made that mistake because right now, and especially on E-Trade, it's hard to get a good fill. And the only way to get a good fill is to set a buy stop limit order, right? So I'm looking to buy stocks that break high day on the 4th minute. So this is minute 1, and it creates a high day because it pulls back and holds underneath it with the second candle. Once the second candle holds underneath this high and doesn't break it, this is established high day at that point. But it comes up and breaks high day on the 3rd minute, right? So 3 minutes or 2 minutes after the high day is established is too soon. It needs to be 3 minutes after high day is established. And I always tell people the earliest I can buy a high day is 8:34 a.m. or 9:34 a.m. Eastern. So 4 minutes after the open. And on that 3rd minute, that's when you have to set your buy stop. And that's what I did. And it came up on the last second right before the 4th minute and freaking breaks it right there. And my rule is not to buy it before 4 minutes. So, it got me in with huge size and it continues. I'm like, okay, well, is it going to work? And then no, of course, it dumps right there. So avoid buying them on the 3rd minute. If it would have held under right here on this 3rd and then broke on the 4th, I would have been fine with the loss. But since I got in right here and I lose, it feels a little wrong to me, right? Especially after you see the fact that right after I lose, that's dead bottom almost, and it holds, 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 and then takes off. And so the procedure here is, because now this is really the actual high of day, because the 3rd minute break nullifies this high day. And then once this candle happens right here, this is now established high day. And we don't want any overextended buys. So like if it would have came up and broke straight right here, I'm not buying that, right? Because it's like a big V shape or a big U shape. Don't want that. So that is a bit up to judgment, but you got to know how much the stock can move in a day, and you should know like the risk reward behind it. And on this setup particularly, we want 3-to-1. So you got to take that into account. Like how far do you think it can move? And you know that you're looking for 3-to-1. Can it make that move based off your risk reward? So if I'm looking at it right here and I'm buying it at 215 or 216, we'll say, I'm risking 2. Like, whoops, right there. Gosh dang it, my mouse is annoying. Okay. So 216 versus 2 is 15 cents or 16 cents. So we'll go 16 times 3 for 3-to-1 is 48 cents. And our entry is what? 216. So we'll go 217 where we get filled plus 0.48 equals 265 is our target. And as you can see, there's 265 right there. There's our 3-to-1 target. And it gets hit. And, I mean, that's a tough hold through that spike probably right here. You might sell a little piece here. Then, it holds, comes up. You sell a little piece here. And then it holds, comes up. And then you sell a little piece there. And it equals out the average in the middle anyway. So, it just depends on how you feel about it. But I'd prefer just to hold straight up for 3-to-1 on this setup. Because I'm either going to get it or I'm not. And the odds say it's going to happen more often than not. So I'm just going to hold for it. I've been looking at this right here, potentially this kind of move where you get a nice sideways structure over your first entry to add. Because your stop's down here, right? I could possibly add and make this my new stop. The only problem is if it were to go like this, stop you out, and then take off, you'd be super pissed. Forgive my language, but yeah, you'd be super annoyed by that. So, I'm only going to add these secondary, what I call secondary entries, if I study them and see enough examples of them working every time, right? That's how you move forward. You don't just make these judgment calls. You actually have to say, like, all right, I've tracked this. Now I'm seeing this happen a lot. Let's track this secondary move. And that's how you make your wins bigger. That's how you average into a stock in the right way. Someone once told me when you're adding, you have to imagine like you missed this entry. Would you buy it right here if you weren't in it already? Because a lot of times if you buy, you're like, oh, I'm up, I can add. But if you weren't in right here, would you add here? That's the key. And you can only know this if you track it. So, um, yeah, hope you enjoyed the study session, and I'll see you in the next one. All right, everybody, take it easy.